Hello, 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 everyone. How is everyone doing? Day after the election, Trump wins, markets scream higher. So, how are we all doing? Good morning, Jacob. Good morning, Patrick. I see all the comments from Sterling. Good morning, Sterling. I will text you later. Again, if Sterling's going in for surgery tomorrow, so let's all send him well wishes, an important member of this channel. So please send them thoughts, prayers, and or good energy, whatever your belief system is. Good morning, Mark. Good morning, Ted. Good morning, Jacob. Nice to see a mostly orderly election. It was mostly complete by 4 a.m. It was nice to see an orderly election without too many shocking things going on. The American people spoke. Hello, Charles. Good morning, Andrea. Good morning, Andrea, with nice little sunshine there. Thank you, thank you, thank you for everybody tuning in. All right, so we had a pretty substantial Trump win. Good morning, Anissa. So now we have to see if, and this is not a weird comment, but we have to, I mean, he still has to be inaugurated. He still has to get to inauguration day because you know what? I don't put anything past what's going on. Not a political comment, not anything else, but we have to see. We have to see. I mean, I don't put anything past the what's in place now from a bureaucracy standpoint from the government and trying to run things separate from the presidency. That's all I'm saying. So we have to see from a market perspective how this plays out. We'll get to that in a second. Just based off of, oh boy, mortgage rates are now going to scream higher. 10-year going in at 4.45%. So this, the mortgage rate the next time this comes out is going to be a doozy, well over 7, unless something changes. Now, bigger comment. I want to see how these markets are in a couple days, whether these moves sustain or whether they're just the euphoria from, okay, it's not Harris. And because a lot of the stuff that Trump's proposing is inflationary. Okay, that's why you have the 10-year screaming, but also the market screaming higher. So, and you have the market screaming higher and it's still not cheap. So let's just see. Because as yields climb, it can put pressures on the stock. So let's just see how it reacts. Now, we've still been in the uptrend. Uptrend continues. Remember, there's no major topping pattern yet. The minor one we triggered was a little wedge going into. The percent B buys worked yesterday. Uh, so we still have that. We have EIA numbers, but then we have big thing now is the Fed. Shifting to the Fed. Speaking of the Fed, I don't know why that's just all right. It's pretty much a lock for a 25 basis point cut, but let's see what Powell's going to say tomorrow because tariffs are not deflationary or disinflationary, and they're going to be cutting in to this. So far, the heat map this morning, Meta and Apple not doing much, but everything else screaming higher. Tesla up 12%. Which I'm curious on that too, because if Elon's going to be in the administration, he's probably going to have to be selling Tesla. So we're going to have to see, or I don't know how that's going to work with a blind trust, but there's going to be some sales in that, and he'll probably get to do it tax free. So that'll be interesting. And when they're going to shut down the EV mandates, which I don't think that's incredibly bullish for Tesla, but that's just celebrating Elon and his role in the election. So far, we have everything positive except utilities. Basic materials barely up, but utilities are down based off of interest rates. Remember, utilities are very interest rate sensitive, and you have the 10-year screaming higher, the 30-year screaming higher, the 2-year at 4.22. You have the dollar rocketing higher. What else? We have fear and greed dipped into fear yesterday, but we should be back to full-blown greed if this rally continues. And just a reminder, this is going to be well into the 37s again. So market is very, very expensive, but it can keep going. There weren't many super micro. Oh my, that's a round turn trash stack. I didn't actually look at that this morning. I'm curious to look at that to see if it popped on all this news with again crypto triggering a percent beat buy, going to breaking out to the upside. So this morning, I was more looking at all election stuff and really just the markets instead of looking at anything earnings, and we don't have Sterling to put them in. So I'll have to go back and check on CVS Health and Toyota, but that's all I really care about. After the close, really all I care about is Qualcomm. You have AMC from a meme perspective, and then tomorrow we got Hershey, Halliburton, Moderna, but nothing big. Again, there's nothing that's going to be market moving, especially with the. It's all going to be focused on the Fed tomorrow. Who else do we have in here? Good morning, Royal Palms. Yes, hit the like or the dislike. Good morning, John. Mike, at the end, can you take a peek at the weekly, daily double top in XLB? I checked, wasn't near to 62.5 to invalidate, but against the rotation zones, so probably would. We'll have to get your thoughts. Okay, just remind me. We'll do that. So let's get to some of these markets. I'm really interested, again, through the remainder of the week, we have cycles clearly up on the daily. On the weekly, we have cycles trying to turn down, but that can be short-circuited. It got into the rotation zone and now rotating back up. I'm still looking at us tagging that 6K area and then seeing what happens. Be interesting, though, right now, the key support going to the open is about 5,900. We just hit the next minor level. The next minor level from these little harmonics, I put on the reverse harmonics, which gave me 59, 52.75. And we so far we're up to 59.54. So we've hit that minor harmonic. If we blow through that in the open, 59.78 and 59.94 are the next key levels higher. If we just continue to rise, because we have some overhead trend line resistance in here, right up there. And going into a Fed meeting, remember, we can still see this stalling. I mean, it's been a lot of price action. The S&P up over 2%. Now, again, 5,900. And then if we're looking, if it does peter out into the open because it sort of I can't use some of these terms. It wasted potentially all the energy. We'll go that way. We potentially wasted a lot of its energy last night. If it consolidates for everything, 5,900 and then 58.96 are the key levels I'm watching on any pullback. But so far the trend is up on the NASDAQ, which is more interest rate sensitive because of tech stocks. You do have a little minor double top territory, probably go off the table, but now we know the key point to watch is Halloween's low. We've returned to the 87.5. If we break out, here's your reverse harmonics. We have 28.86, and then very key, look where the next harmonic lines up versus all-time highs. Let's just see. The next harmonic, I can't even see what that number is. 20,963.50, and the all-time highs were 20,983.75. So right there is your key should this continue. We hit the minor 87.5 right there. That's the one I was looking at. And you also hit a more significant 87.5 from the other retracements. But I'm still looking 28.86 the upside. Now, it still hasn't gotten through a very strong resistance area. By the way, this double is very sloppy, but I will look at the targets to the downside were that to trigger, because really we could be headed back to the 50%, but there's nothing in sight that says it should trigger today. We'll have to see. Really going to be interesting with the Fed meeting following up tomorrow. But those are the next key levels. By the way, if you're interested, you can't tune in all the time. Next key target is 21,437 to the upside, and then we have 21,892, so 21.9. And this does nothing also to invalidate yet the big weekly potential double. So overall, we still have a major line in the sand should the markets roll over, which I'm not saying they're going to. We have to get some other price action happening first. Dow, you see up almost 3%. The reverse harmonics gave us 43,805. And we have a high of 43,781. So not quite there. Not quite there. You can see, but that's the key level. The breakdown from the head and shoulders is obviously done. And now the next key level is 44,209. If it continues, the next harmonics I will be looking at personally will be for the next major harmonic would be 42,211 and 44,841. The Russell, which is in, I mean, this is also very interest rate sensitive, but it's just thinking Trump is going to solve everything and small caps are going to, remember, a lot of these companies are still zombie companies, but the Russell could be poised to take out all-time highs. 20,460. Remember, we had triggered the 62.5 rule a while ago, and it just hit the 87.5 with the price action yesterday. So the only thing I'm watching is for the new highs, 20,460, and the key support. The minor support, I will use the harmonic at 20,358, and then major support is 20,323. Let me restate this: 2358, not 20,358, 2358 and 2317. The VIX. The VIX, we have a little drop in the VIX. Oh, sorry, a pretty big drop in the VIX, back to 16, back to key support. Had it dropping yesterday, I was misreading the chart. Sorry about that. So, everything's fine in the world. I think the markets are a little too euphoric and complacent, but the trends are still up. DAX, look at that volatility. Still, let's just see here. I have to check something here. Still, this is off the table. There is no more, even though it didn't, we had till Thursday to trigger, it's technically off the table. So I'll just be watching this key support of 19,127 right now in the DAX, and key very major resistance is 19,637. Other than that, there's no great pattern. The notes coming back down to the 75 harmonic in the notes futures. I redid the projections here. We have some pretty key support area in 19,905 to 109.04 to 109.05. If we do, we still have the magnet price, not necessarily over the next few days, but the magnet price over the short term is still 108.06 to 108.12 now. We are coming into a substantially longer term trend line area, so I'm watching for some short-term potential support coming in, but this is a monster sell-off in the notes. You see the yields hitting the 75% harmonic, breaking through a key descending trend line. We should still see the yields closing in around 4.6% over the next few weeks. All right. What else? The dollar, which Trump wouldn't like, moving higher. He wants a weaker dollar, but there you go. Closing in on 87.5 rule in the short term, 105.37. I'm really going to be curious over the next couple of days, though, how these moves, if they can sustain or not. So the dollar screaming higher. Just the key support is all the way back at 104 to 104.20. Next target area is really this 105.40. Crude, little pullback in crude. Going to be interesting here because, you still have massive stuff going on in the Middle East. But this gives me a very key inflection point. We do have daily cycles at the top. A little pullback here. But I'm going to be watching to see if this rallies back up today, if we do break above this 50% harmonic where it topped out yesterday. I'm watching that very keenly because we still have a gap left behind the 62.5. Gold, big pullback here. So now, after the dust settles, we're closing below 62.5 probably. Not guaranteed, but if we close below 26.87, I'll watch for reconnects with about 26.41, and then I'll start watching for the secondary reaction. Now, the secondary reaction will help us determine if we're putting in more of a medium or longer term top. Remember to watch for the secondary reactions now. This is the primary reaction, getting a very oversold. Secondary reaction is going to tell us a lot over the next few days. Long term, yes, does this candle do damage? Yes, it now brings it back to the weekly rotation zone, which is another reason I'll be watching for the secondary reaction. And then the key things that I talked about with any secondary reaction is watch the 50% to 62.5%. If it cannot get above there, then I'll start watching for the bigger rollover play. Everything's just, again, don't make, here's the thing. This is yet a blowout election. I mean, I was not expecting to know the results this soon, but he won the popular vote. This is the first Republican popular vote win since 2004 and was a massive smackdown to the Democrat agenda and what's been going on the last 4 years. That's more what it was. So now the markets are in, hey, everything's hunky-dory. Trump won. Let's see. You got to now watch. Don't panic on primary reactions. Just like, yeah, the trend's still up. But I wouldn't be saying S&P to the moon with valuations and yields rising this much. Can it follow through the next couple days? Yeah. Can we hit 6K? Yeah. But we got to let the dust settle to see the long term. This is still just trading. Now, gold was also, remember we've talked about this. Look how far it is off the monthly rotation zone. It can easily, we can set up a key top and then easily return to this rotation zone. Could you return to 2,500? Yeah. Easily. Now, will we get bounces along that way? Yes, and we'll have to determine if the bounce then closes back above the 62.5 on the secondary reaction, it was just an overreaction pullback. Silver also finishing the double top, clearly finishing the double top, and then moving lower. Okay? But silver coming into a major support area right around this 30.75. So we're going to have to see there. The thing that would put a kibosh on silver in the short term is a close below 29.71. The yen. Bank of Japan's not going to be happy about this one. Yen, back to the rotation zone. Yen, percent B buy, followed through with the close. The yen also, if we close above 153.56, triggers the 87.5 rule. Okay, which would take it to the major intervention territory again, forcing them to probably intervene. Won't be happy about this. Look at this. This is the whole thing. This is where it's going to be very telling. It tried to roll over from the 62.5, got caught in the rotation zone. There's a reason I follow all these things and rotate back up. The minor target in the short term is 156.35. I'm going to still be watching, make sure this follows through today above 153.56 and then follows through on the weekly basis above 153.56. The euro getting smashed. Remember, completed the double and then coming back down to very, very key support. So that now the key resistance for me, bumping it down just a hair, is right around 107.80. The gold head and shoulders. Where's my gold? The gold, I don't have as strong. This is a minor head and shoulder, very minor. You see here, based off the horizontal neckline, it's pretty much, here you go. What am I doing? There you go. We're almost virtually there. And if you were to do the upward sloping neckline, you'd be, your target would be, it would have hit the target. So we're right in that target area for your head and shoulders on gold. Excellent question, dark screen. You're back already, Sterling? I hope you got the key cars out, the car keys out. All right, what else do we have? And I wish you all the best. Just give me a call when you have a chance today, Sterling. I know it's your day off. Just give me a call or text me and say, ask me to call. But just do it on your schedule. My schedule, you know, besides recording, I'm recording Futures Edge with Jim and Bob this afternoon at 4 Eastern, so 2 Arizona time. So other than that, I'm free. Besides market stuff, I'm free. Sorry to get sidetracked there. Let's take a look at the TLT real quick. What do I think about the TLT? Well, it didn't trigger the little minor double bottom, and the next magnet price we talked about the other day after it closed below the 62.5, the next magnet price is 89. 89. 89.13 to be exact. And it's gapping down, so I'm expecting it to still go down there. Now, beyond that, if we continue lower beyond that, then I'm going to be watching for the next harmonic down here, which we could very well, which would be 84.82 would be the next key level. Okay? Well, see, this is the interesting thing because higher yields aren't actually beneficial to stocks. This is why we're going to have to see how this plays out. Higher yields in the long term aren't necessarily better for stocks at this point. You have the Trump euphoria. I already talked about that, but the higher yields can be a net, after this euphoria wears off, can be a drain, especially if you get inflation coming back in. And you have a lot of tech refinancing that has to happen next year for rollover debt. And higher yields are not going to be beneficial in long term. Short term, yes, we got the euphoria trade. So just keep that in mind. That's why I'm waiting to see how it plays out over the next few days, especially after the Fed meeting. Key levels on. Right now, your key levels. I'm looking at 590.68. We're trading 588.81. 588.40 would be the minor harmonic, 590.68. Then your major cluster is 595. Just remember 595. Okay, that's where we sit there. The Qs, we had the double. Why am I clicking on the wrong thing? We had the double that triggered on the 4-hour yesterday and is completed all the way even above the 87.5. So the double, just like some of these percent beat buys, which worked yesterday, are completed to the upside now. To the upside, well, I'm using the reverse harmonics. You have 503.50 and then 505.75. The Bitcoin, which you had the percent B buy that did not close above, but then you had the rocket ship. Now, The key targets are about 77,000, then 79,000 to the upside. Bitcoin, though, is producing a potential massive end of wave move unless, I talked about this last futures edge, unless it can sustain something above 71,000 for multiple weeks. Yes, and then Trump won't want the higher dollar, and the higher dollar should put pressure on the stocks. That's why you have a higher dollar, higher yields, and higher stocks. One of those things, either you're going to have the dollar drop and yields start dropping, or stocks, they don't have to drop, but they can go into consolidation. And also remember, they aren't cheap. Hey, Stafford. So that's what I'm saying. Still know where your stops are. We're still in short-term, medium-term stocks positive mode. You have Tesla. The next key area with the breakout on Tesla, besides the minor harmonics, the next key area I'm watching is 297.24 on a closing basis. That would trigger the 62.5 rule. So remember, you're still in the key rollover zone. Still in the key rollover zone unless it triggers the 62.5 rule. NVIDIA, actually hitting the first and second targets on the double, and then moving on up. If it breaks out again to the upside, let me revise the harmonic levels at this point. We still have a key one right here at 147.02. Then really I'm looking at 151 to 153. Where do we stand? All right, let's take a look at the S&P into the open, because this is going to be very curious. The massive run up overnight. Support is strong at about 59.20. If we start breaking there, I'm watching back to 5,900 on the open. Let's see where the tick is. The tick is a very weak, it's positive, but it is a weak positive opening. So this is what I was slightly worried about from the intraday bullish perspective, that it ran itself out last night. But that being said, if it can get through 59.50 with momentum, then the next key target heading into the Fed meeting would be 59.78, then 59.94. All right, what else? I missed another stock. Hold on. There you go, Jacob. You've made it your own. Pavneet, I question, do you think the risk reward is not great in the 62.5 rule? You don't have to keep it the farther away. You don't have to keep the stock or to stop the other side of the flip. I've never said where the stops I put are. It's just a probability shift. And then I look for other things. I don't just put an incredibly far away stop. Okay? Can we take a look at XLB? I thought I forgot one. XLB. Oh, come on. Which triggered the very nice double top. And obviously did not get to the first stop. And you don't have a stop reduction yet. So the key closing basis on the XLB is to invalidate it is still 96.36. So, or an intraday trade through 96.86. Other than that, you have the gap up, but nothing's done to invalidate that pattern yet. There you go, MJ. Sorry, I missed some other, yeah, there, you remind me XLB. So that's where we sit right now. Let's take a look at the NASDAQ too. NASDAQ, I think. Ooh. I mean, the key thing to really watch in that NASDAQ is this low from yesterday. That's the key thing. Other than that, we'll be watching still for the upward pressure, trying to take out all-time highs. There's going to be a lot of magnets to try to take out these all-time highs in the NASDAQ. By the way, that does not invalidate the potential massive double top. Yes, you could use the gap harmonics to lead into the double trade. Completely valid. All right, with that, I have to jump into the open. I hope everyone has a wonderful day. Again, Sterling, if you're still listening, just give me a call or text when you have a chance, and I will talk to everyone later. Bye for now.